we might have lost Frank. I think Frank
Yeah,
had a, oh, there he is.
the connection's really slow. But what'd you say?
We were talking about Euro New Zealand. That is the trade that you were looking at too, right?
Right, yeah. Still in that, still trailing. Um, Looking for I guess just reiterating, just looking at a completion to the upside, hopefully to hit the top of that channel, around the 1.8, 1.81s, somewhere around there. But very dovish Kiwi right now. Euro's the most bought in terms of smart money, so just kind of seeing where it'll go.
And Tom, yesterday you spoke to us about the euro against the Australian dollar. Is that right? Are you still in that trade?
I took profit again on the highs. I got in Euro New Zealand earlier today, but you can see I hit my profit target at this level here.
Nice.
Because, yeah, if you see on the day chart, that was literally back at those daily highs. So, price came back up. We got this lovely value entry down here. Oh, and then I'm also in gold. And then price came back up and hit this daily high. So, yeah, and what I do, guys, is I take some profit. So at this level, I'll close around 80%. And then my next target is up to here and I'll let 20% run, but also re-enter the trade as as price kind of comes up to this area as well. So yeah, Euro Australian dollar was a nice trade, and currently in Euro New Zealand dollar, trying to take it back to these highs. Let's have a look at Euro New Zealand. Yeah, just trying to take it back to these H4 highs to start with. Again, I'll take some profit and then let the rest run up to this higher time frame target up here. But the only thing about this was that really poor CPI data coming out of Germany earlier, which is, we'll see how that reacts, but it's having a bit of a negative reaction now. But yeah, we'll see. But Euro New Zealand longs as well.
Yeah, and Tom, yesterday we spoke about something for people who may have missed that component. When we're talking about this euro against the Australian dollar, which, Tom, sounds like you're having an exceptional trading week, which is awesome. He's trading.
Right.
Yeah, he's Aussie dollar. He's trading euro, Aussie. One thing that we noted yesterday, and I think it's really cool to follow up on this, is we talked about the commitment of traders data in regards to the Australian dollar and the euro specifically. So Tom and I were talking about this yesterday. He bought a retest, a beautiful price action pullback, but he mentioned that it kind of aligned nicely with what the commitment of traders data was showing him as well. Specifically, that in terms of where institutions are positioned, we're talking hedge funds, small bank, large speculators, right? People with professional money making decisions are very much overall, on average, they're long euros and they're short Australian dollars. Okay. And so knowing that information when you're looking at a chart is really important, because if you're looking at something that is trending well, but it doesn't have that COT data to kind of back it, it may be something where you want to be like, let me be cautious here, because again, institutional money might agree or disagree. But in this case, the wind was in his sail, right? The euro long, the Australian short was kind of the COT, or the commitment of traders data positioning, which of course we can track in this. We have not just the euro and the Aussie, but all currencies as well as several commodities. We recently added Bitcoin. We've got indices in there as well. And guys, we have been dropping out free trials here today. All you have to do for a free trial is fill out the form that we dropped earlier. Let's drop that one more time, if you don't mind, Chandler. Chandler is our superhero today, coordinating. We got Tom in here. We got Frank in here. We've been live for an hour and a half already. So it's a hectic day, and Chandler is we're really making them work today. So thank you, Chandler, for that. And there it is, guys. Click that link if you guys would like a free trial of the software. You can check out our COT data, retail sentiment, and again, all of that is a free trial, so you can check it out for yourself, see if it's a tool that would be helpful to you. So love the points about Euro Aussie, and it seems like you got a nice point to take some profits here, Tom, as it is retreating just off this 1.65 mark. That's quite the Australian dollar trades that you've got on right now.
Yeah, definitely. And this Euro New Zealand trade gave us such a beautiful setup earlier. You know, again, just one of those what was once resistance. So this is the H1 on the Euro New Zealand. This is exactly my entry. And what was, you know, price came up, it was hitting this level, this becomes resistance, you know, and when price breaks this level, comes back and retests this level, you know, like I said yesterday, guys, this is my bread and butter. What was once resistance becomes support. And then we just look to take it back to, you know, the last highs initially, where I close some profit, and then I'll leave some profit to run for 12 years maybe. But yeah, you know, those trades are just what I'm looking for. And I try to, you know, look at the H1, and long as it makes sense on the H4 as well. And, you know, pretty much as I woke up, we had this H4 candle, which, you know, is just telling me buyers are in control and we, you know, want to carry on up. And a little while ago, we just had this H4 candle finish as well. So, you know, still confident buyers are in control. But yeah, that CPI, German CPI is still in the back of the mind, you know, about the euro, but still looking good, this trade.
Yeah, it's cool to see you and Frank kind of on the same wavelength with that Euro New Zealand trade. Even though you guys hadn't talked this week yet, you're both kind of on that long side of the trade, which is really cool. I want to just shift our focus a little bit. We are about 12 minutes out. Of course, this is why we're gathered here today. The big event is on the horizon. We've got JOLTS job openings coming out in just over 10 minutes, which of course will give us insights as to the number of job openings here in the United States, which of course, with us being one of the drivers of the world economy, a lot of focus will go into those job numbers coming up. Frank, give us a little bit of sort of just a game plan. What should we be looking out for in terms of job openings here today? How could this impact the markets, and what specific charts are going to be impacted by job openings as we get started today?
Right. So NAS is going to be pretty good for the dollar. So they're going to probably, the Fed at least is going to be looking towards another June rate hike. The JOLTS jobs and then NFP Friday are going to be pretty big on what investors will think interest rates will go.
Yeah, and it in terms of which charts specifically, of course, you've got the dollar, but what does it have in terms of impact on gold and indices, especially? Because I guess a lot of newer traders in the audience may be wondering, will this impact my gold trade? Will it impact my NAS trade? How could the JOLTS job openings potentially impact those things specifically?
So a beat in expectations is going to be bad or bearish for indices, good for the dollar. So I guess if you're trading Euro USD or Pound USD, you're gonna, and if you're a bull on either of those pairs, you're gonna want to look for a beat in JOLTS and then a beat in NFP, or just a meet at the expected forecast. Gold, on the other hand, I have that pulled up. It's already kind of, I guess, sentiment is gearing towards maybe a miss in the data. That higher rate, not but you see it touch higher before was a big rejection. So maybe gold is trying to turn to the upside here and expecting a miss in that jobs data.
Yep. And sounds like you cut out there for just a moment, but it seems like you're back now, Frank. I think, gold, like you mentioned, it's flying high here this morning. And like you just said, maybe expectations here are now a little bit, that job openings could be slow this month, and that perhaps that could lend some upside for gold. Again, why that would be the case would, of course, be that the Fed, if it sees slowing jobs numbers, is more likely to pause on rate hikes, right? Because too many rate hikes can be really devastating to the economy. But if the economy is really strong, meaning jobs are red hot, they might not worry too much about moving rates. So we're watching this jobs number today. It is why it is a red folder. As a newer trader, I remember just seeing, oh, it's a red folder, it's going to do something. But now later on in our trading, careers, we understand really in more detail why those things actually really move the markets, right? JOLTS numbers, the jobs numbers are going to show us what the appetite for hiring is here in the United States. So it will be very impactful. Again, I think in terms of gold right now, in the shorter term, Frank points out on the higher time frame, we got a longer term trend line. I've been watching very closely to see how this price reacts around 1980. So I've got my chart pulled up here, and I'll show you this. On the chart, 1980 has been a stubborn level of resistance for sellers. We're looking at this, we're seeing 1980 continuously shows selling pressure, right? So as we trade higher, be cautious as we approach this 1980, because we could come right back up into this and yet again see sellers take back control of this market. However, Frank points out that on the daily chart, we're hitting a longer term trend line and we're seeing some reaction to it already. If you're watching this from a bullish perspective, the most bullish thing I think that could happen today would be an explosion to the upside on gold beyond that 1980 mark, and now capture that area and perhaps establish a new higher low in that area. So we'll have to watch to see. Again, it's going to come down to the numbers, which we have coming out in about 7 minutes. Tom, you mentioned, do you have a trade on gold? Do you want to talk about gold for a second?
Yeah, sure. I'm in a gold trade, again, taking a bit of profit off of this trade. So yeah, pretty much the same areas you had mapped out, guys. This longer time upward channel, this area of support, this channel as well, makes this a really good area of support. If we zoom in, we also had this, really nice bullish candle bounce off of this level. It's dwarfed this candle, even this candle. Okay, so a real bullish push off that zone. And then basically, guys, what I'm looking for is kind of a H1 structure build-up. And and that's what we got. So when price came back to around here, I started entering buys, with a view to a stop down here, and then looking to take it higher. And totally agree with your target there. That H4 level, which I've got marked in here, is my target. Okay, so yeah, this level here, like you pointed out, Nick, has proven a good level of resistance. So we'll see what price does after these job lot openings and how price reacts around this level. Again, I'd probably take some profit here because I don't want to, if I'm buying the market, I don't want to fight sellers. Yeah, I just don't want to fight them. So when price gets here, take some profit, usually around 80%. And then if it does come back down, I can still enter more into the trade. And if it has another attempt at this level, then, we can still, see if it breaks it. But that's how I'm trading it today. And that's what I'm looking at. But yeah, this level, we get a break of this, like you say, we could really.
It's cool to see us kind of on the same page there.
Guys.
Yep, go for it, Frank.
Sorry, it's so delayed. But my question is, what if we see a beat in jobs openings and we see a miss in NFP? What do you guys think of? So we have a large amount of open positions in the market, but we see a miss in the number of jobs added.
So if we see a large amount of job openings, but then we have, well, so let's go look at the definition here for a moment. Minutes out, guys. Also, we will be doing, for those of you guys who have been waiting on the Edge Finder giveaway, that is coming right after the announcement of job openings will come back. So don't go anywhere. And I'm going to tell you about how, if you haven't joined the giveaway already, we'll drop some information in the chat real quick. If you guys have not joined, we're giving away an Edge Finder copy. Click the link that's being dropped in the chat right now. Message us that you want to join the Edge Finder giveaway. Do that right now if you have not already. It's the last chance to do it. We're going to be announcing the giveaway winner after the stream announcement. So join that if you have not already while I go over this really quick. Click that link, chat us right now, join the giveaway if you have not already. We're announcing that after the JOLTS job opening. So to answer your question, Frank, first of all, we need to understand number of job openings during the reported month, excluding the farming industry. So if we see a big job openings, a demand for job openings, that would, of course, be bullish for the dollar because people would say, oh, well, the economy is clearly strong. But then to your point, if we see non-farm unemployment change, jobs getting filled much less, it'd be a little bit confusing, to be completely honest. I feel like it'd be kind of conflicting, right? Because job appetite by hirers, right? Employers are the ones who open up the jobs. If their appetite's high, but then they're, not a lot of jobs are actually getting filled, I would just be genuinely confused, to be completely honest. But it's a good question, to be honest.
Yeah, like what carries more weight?
I think probably probably the decision to actually hire someone, the NFP probably does, just because again that means that papers were signed, somebody's filling the seat, they're now manning their post at the job. I think that's probably more impactful, but still job openings show the appetite for hiring as well. So they're both very important numbers. So, guys,
Overall,
also we have
since February.
Go ahead, Frank.
My goodness, this stream must be like 5 seconds delayed. But since February, the number of job openings, regardless of beat or miss expectations, have been diminishing. So the past however many months since February, 3 months, the number of job openings. Is that really a good sign or a bad sign for the market? And does it solely depend on that data, or is it also, more so about NFP that comes out every month too?
Yeah, exactly. I mean, it's just they're both very key important numbers. I want to also just make sure I don't miss out on the actual release number, guys. We are coming close to the release here. We've got, I'm pulling up charts just so we can keep an eye on everything. I'm going to put the S&P 500 in the bottom left. We've got gold in the top left, and this is just my 15-minute chart so we can watch the reaction to the news. Our second news event here for the stream. Let's go breaking news right now. All right, here we go. Let's see if we get any reaction to JOLTS numbers. S&P immediately selling off. Euro dollar selling off. Dollar strength coming in dramatically here. Gold also rejecting just off that 1970 mark. And we're just watching the reaction here. Dollar strength showing its teeth right now. Let's see what we got in terms of JOLTS numbers. Job openings hotter than expected at 10 point, back above the 10 million mark. Forecasts were only 9.41 million, and yet JOLTS job openings came in at 10.1 million. So showing higher than expected job openings here in the United States. That is quite the number here. We've got gold selling off from its 1973.7 high. We've got the S&P selling off as well, as this is probably driving some fear that, again, rates may be due to go higher. Dollar strength, 104.48 here, trading off the lows. Frank, what's this doing to the market right now? What are you looking at?
So kind of feeling bad about my dollar yen trade. I wish I had stayed in, but it hit my my SL, so got to stick to my strategy. But dollar takes off because of this. It's also an initial reaction, so I'm not really sure what later on. But I like dollar yen still, similar to euro kiwi in terms of channel moves. I like this completed move to the upside. If it touches the top of this trend line, like the twos or something, I like dollar short term. I don't have too much bullishness on it in the long term.
Wow, guys, this is a fascinating thing I just discovered. Sorry to cut you off. The NASDAQ actually just jumped off of this. That is a very interesting reaction. Jobs numbers came out, and look at the NASDAQ heading and rallying off of this level here. Not the reaction I would have expected, to be completely honest. I would have thought that the NASDAQ would be a little frightened by what looks to be stronger than expected job openings numbers could lead to further rate hikes, but perhaps it also just shows an increasing demand in the economy. Again, this is why jobs can be a little bit tricky when it comes in relation to the stock market specifically. Tom, what are you looking at here as the news drops? Are you which pairs are catching your eye right now, or indices, or whatever you're looking at?
Yeah, just looking at my gold trade at the moment. So obviously that's gives some strength to the US dollar, those better than expected figures. And what I always find really interesting when you have these news releases, who wins the battle between technicals and the data release? I don't know if you see that as well, guys. Sometimes you'll have a very good, this is a very good area to enter buys for gold to take it back up to here. But we've had better than expected US dollar news, so we would expect US dollar strength. And what I find interesting is that battle between those technical levels and the news that's been released. So this will be a really interesting area. Will that data keep pushing US dollar down, or will we find buyers in here at this technical level to push back up? And it's not always the data that wins. Sometimes the technical level holds its own, and it carries on as it was before. So yeah, that battle will be interesting on this gold pair.
Yep, absolutely. And guys, I have got to cut the stream here pretty soon. I've got to jump off for a podcast episode. Thank you both, as always, for joining us. I'm going to be doing quickly an announcement of the giveaway winner. But before I do, let me thank Tom for coming on. Tom has his own YouTube channel. We got the link dropped in the chat. Click this link. Go subscribe to Tom. Tom, thank you as always for coming on. You made it last minute. I appreciate you coming in and just helping us out. This was a almost 2-hour stream, so I really appreciate the help.
And cheers, guys. Thanks for having me again.
Thanks, Tom.
As always, guys. Thank you guys for tuning in. Frank, you as well. Thank you for coming in. And real quick, I'm going to do the winner announcement here. Give me just 1 second. I've got a winner, and let me just see. Give me 1 second. We're going to be announcing the winner of the. Okay. So we have our winner, dfgsmith@gmail.com. dfgsmith@gmail.com. You are our winner for the Edge Finder giveaway. So thank you guys to everyone who entered the giveaway. If you did not win, dfgsmith@gmail.com. Let me make sure that is the right. Well, I can't see which email provider you have on here, but DFG Smith, you know who you are. Email from your email into the support chat, or to the support email, support@A1Trading, and we'll get you your prize. Thank you all for tuning into today's live stream. If you have not joined the Discord, we're going to drop the Discord link as we end today's stream. I got to jump off for another podcast. Thank you guys for tuning in. We'll see you next time.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And if you create a new trading account with ACAP, You can get tools like the Edge Finder completely for free. Check the link in the description for more information. From all of us at A1 Trading, have a great day, and we'll see you next time.